Raamdeo Agrawal, Director and Co-Founder of Motilal Oswal Financial Services, joins us now. Raamdeo, morning. Thank you for joining us. Raamdeo, this is a great time when contrarian investors like you shop. So rather than me asking you that are you buying, let me ask you what are you shopping and where are you buying?
Yeah, I just came into the office and I was trying to figure out if there is anything interesting among the stocks I own, because trying to buy a completely new company about which you don't know enough is very tough call, but buying into your existing stocks is the best thing you can do. So I have not seen any major breakdown which really so during the day, if there is some interesting 5-10% lower price for what you like is there, we'll definitely buy in today.
So on a 5% decline, which are the 3 stocks you would like to add more or you would like to buy?
So, we have the same stocks, say like if there is any major breakdown in two-wheeler segment, Bajaj to Hero Honda, if there is a major breakdown, I think the stocks are down about a percentage and a half, so we don't see any major drop there. Banks are looking interesting, so that's where again we'll shop in. Telecom stocks are looking interesting, so idea is just about a percentage down. So we are not seeing very huge fear out there. So but I think if somebody doesn't have a stock and somebody wants to enter the market, this is a time to at least start do the beginning of entering the market.
Raamdeo, you mentioned banks. What would it be? Would it be PSUs or would it be private banking blue chips?
I would start with PSU right now. Because those will be, if there is a rally in the treasuries or if there is any softening of the policy on the rate hike side, or I think those are the ones which will respond very first.
Raamdeo, Indian markets are down by about 12.5% in last 15 trading sessions. How much of the decline do you think is largely because of local factors like interest rates, earnings, and how much of the decline is because of global panic?
Yeah, I think the last 2-3 days have been purely because of the global panic, but the trouble started with our own interest rate hike, which was unexpected. So I would say 50-50. 50% is because of our own policy making, and other 50% is because of the global panic right now.
Raamdeo, for someone who has seen many bull market and bear market cycles, upon your experience, do you think Indian markets are approaching a panic bottom?
See, it is very tough to say these things. Only looking back, you can say that was the bottom. And all the chartists and everybody can be very smart once everything is done. But current market is not that panicky kind of condition. In panics, typically, when the panic is complete, I think you definitely look at single-digit P multiples. So right now, it's still a 15-16 times P multiple for the current year. So it's not a completely panic valuation.
Raamdeo, it's interesting that your buying list comprises of interest rate sensitives. Does it seem like the rate cycle may be close to peaking out anytime soon now?
Looks like. Maybe if not immediately, but we are closer to that, because if all these things, whatever is being talked about, if it happens, the global economy slows down, commodity prices go down, and then obviously inflation will also come down, and government will try to take some counter-cyclical measures. And first thing which will come is probably at least stoppage of rate hikes, and then eventually if inflation comes down, they will tend to soften the interest rate, and hence they'll allow the growth to happen. So there's a lot of industry resistance and things like that. So I would think that we might be closer to that, but you can never know these things, and you might be in value trap in these stocks for some more time. But if you take a 3 to 5 year view, these things will pass through. In 6 to 8 months time, I'm sure you'll have a much better time.
Raamdeo, historically Indian markets have never gone below a P multiple of 11 or 20 times. We currently are trading at about 15 times. So can I safely assume that the scope on the downside is still open?
I mean, it is very difficult to say whether it will happen, but I mean, old charts are old charts. There can always be new charts, and you can always have a bottom farming at higher levels than whatever you have seen in the history. So yes, if you go by the historical this thing, then the gap between current valuation and the whatever lows we have seen, that could be I mean, if things absolutely go haywire in the world, I mean, nothing could be controlled. Currency wars are there, or all over tariff hikes are there. Global trade is in danger. Commodities are in danger. So if there is again a chaos, then clearly we could go to those levels.
Raamdeo, what kind of trades would you initiate on the back of the cool-off in crude prices? Is it time to go long OMCs, short companies like Kane?
Definitely OMCs will benefit, because finally government will come on top of their petroleum price agenda. So that clearly would be beneficiary. But Kane Energy and all are function of also, apart from the price, it is also function of how much ramp up will be there in the production. So if oil stabilizes, say $95–100, and they're able to double or triple the outputs, then I think the outcome could be very different. So not necessarily decline in the oil price is bad for Kane. Of course, in short term it is not good for Kane, but in the longer run it is not only the price play, it is also a volume play. Whereas decline in the crude price will clearly positively impact the OMCs.
Raamdeo, over the years, irrespective of what the world tells you, what your friends advise, you've always been an independent thinker, and you've always bought stocks when you see deep value has surfaced up. So at current levels, where are you ready to bet your family silver, sell your house and buy that stock?
Nikunj, it's already on the, we have already put the bet. 99% I am already in the stock. So it's not that one has to initiate a fresh, initiative in the market. It's all largely allocated. You keep getting these dividends or something you have sold. So that money is there, and there I think, see, it's this predicting the future of economy, predicting the future of market particularly is very, very tough. But can we see businesses stable, growing, and earnings being sensible? So we are buying pieces of businesses. What we like, we buy and sit through. At times it works immediately, at times it doesn't work immediately. So what I'm saying is, right now prices are interesting, and it may become even more interesting. So you start buying somewhat today, and if it becomes even more interesting, you buy some more and wait through. And after 3, 4, 5 years, we have seen that generally if you buy good things at reasonable price, that gives a decent return. And that has been the philosophy in the past, and today is the time to gather courage and execute that strategy.
So based on the kind of global environment we are in, Raamdeo, you are not reassessing any of your investments, and you are in no mood to sell any of your large investments?
No, definitely not. Today is not the, I mean, there's so much of confusion. I mean, if you see what Mr. Buffett, I mean, all the knowledgeable people in US, they are saying that US should get, 4 A's rather than AA. So, and people are questioning whether S&P is competent to rate US, because they have not shown that maturity when things were so clear in 2007 about this, all the subprime mortgages. I mean, when they rated AAA to the instruments which, I mean, on the face of it, even before the crisis was clear that they were not AAA. And today, they are rating AA, country which, I mean, I think the base of rating starts from sovereign like US. So I think there is not that. Most of the people are questioning whether there is whether S&P is competent to downgrade things like this. So I think confusion is total. I don't have any personal view on this. So I would rather take a kind of walk out of the market, and if I find something very, very interesting because of craziness in the market, you put some money in.
So as a precautionary move, Raamdeo, would it be prudent to stay away from companies which have exposure to the Western world, that's US and Europe?
No, they have stable business model because that's where the attack is maximum today. I mean, if you see on the Friday, all the tech companies, the best of the lot, they were down 4-5%. Today again, they're down by 5-6-7%. So I think probably opportunity is right there only, in the sense that one should buy TCS or Infosys because I don't think business will be impacted so much in the short run. I think there's a lot of fear because of 2007 impact. People are recalling the experiences of 2007, but I don't think there is anything like that.
Raamdeo, those who bought IT stocks in 2008, they emerged as clear winners. So would you advise our viewers to use the current panic to their advantage and buy large cap IT stocks?
I would think so. I mean, if there is too much of panic in the IT stocks just because they have a US facing clients, I would think that that would be one of the better buys out of India.
Raamdeo, what about defensives? Defensives, they often tend to outperform in a choppy market. They often actually tend to outperform in a range-bound market. But when the P multiple for the entire market is shrinking and compressing, do you expect defensives also to underperform?
Defensive by very nature may not underperform now, but as the market rallies, they may not rally because they are already at a very high prices. So things like Nestle or Asian Paints or all these non-cyclicals, they are trading at 30 plus kind of P multiples. So generally they don't tend to go down much, but when the markets are rallying, all the cyclicals and general janta of the market, when they start rising, that time these stocks, they remain very, very range bound and they tend to underperform. So you may see next 3 years when the market rallies from say 16,000-17,000 to say 30,000, these stocks may not double. They may just be with the market or maybe lower than market, but other stocks may go 3 times or something like that. So I would not say that these stocks are going to collapse immediately or one should go short in this kind of stocks. I think if the businesses are very good and they're reasonably priced, not outrageously priced, I think the stocks are done very well. One should not abandon them at this juncture and sit through next 5-10 years to harness that prosperity which they are going to bring.
So Raamdeo, what about niche consumption plays which are quoting at high PE multiples, the likes of a Jubilant, be it a Talwalkar? Is it time to book out and find newer names when it comes to consumption themes?
See, I wouldn't know specifically each and individual company prospects, which is very important to say what should one do. But if something is completely into kind of price to imagination kind of instead of price to earnings, if it is price to imaginary kind of situation, clearly you should book your profits and stay away from these stocks because stocks cannot. Without earnings, stocks cannot remain high for a long time. So, howsoever good exotic might be the concept, eventually earnings have to support the stock. So, if there are no earnings, there is no earnings growth, and you don't think that value can be justified even out into 2-3 years of kind of valuation, so then you should clearly take your profit and enjoy the profit.
Raamdeo, I've got an email from a viewer who's actually watching the show, and I would love to get a response from you. And the question is that please ask Mr. Raamdeo Agrawal for one stock idea which is not a Nifty 50 stock from a 3-year perspective.
Yeah. It's not a Nifty idea. So one of the stock I would think one should get in is, but Bajarto is clearly a Nifty idea. I don't know many non-Nifty ideas because these small companies, you don't know what really happens. But I've got quite a few of them in my portfolio. So, but it's not like I talked about central bank earlier. I think at 30% lower price, central bank is even better idea. So I would rather reiterate the standing on central bank, and so that's a non out of Nifty idea. and very unpopular, extremely unpopular right now. Price is very, very reasonable, and your downside is very limited. Your capital is protected on a longer term basis, and you could make some interesting gains if the economy turns around.
So how should we wrap up this interview, Raamdeo? Are you bullish? Are you cautiously bullish? Or this is a good buying opportunity and on every decline, you will buy stocks?
See, Nikunj, we are already invested broadly. So, first thing is, we should, fundamentally, we should be optimistic. I mean, I don't know about bullish and all. There's so much of macro news flow going around. I'm more concerned about my inflation. I mean, actually, I'm not so much concerned about this global economics and all. I'm more concerned about what's going to happen in India. Are they going to raise interest rates? Are they going to, do the reforms so that, the growth momentum again builds up in the economy? The earnings become more predictable. So I'm more worried about our local problems rather than all these global things, which I really find it difficult to fathom in my mind. So I'm completely focused on to local issues, and I hope these global problems will lead to more responses, much more prompt response from Delhi, and reforms will take place, and it should be good for us in 3 to 5 year cycle. So I'm bullish, I would say.